Hello and welcome everybody back to the Pulse here with the PeakBot team. I am Dillon, joined by my co-founder and co-host Ben. We are here on the day that at least a lot of people in the States here think should be an off day for work, coming off of the Super Bowl hangover. Good game last night. Finally picked up there in the second half. None of my Super Bowl squares won. Couldn't find a score that matched.
No, that's unfortunate.
Yeah, it is. But we're back and we're ready for another week of trading. Hopefully, I can make up for some losses this week in premium. So excited to get into things here. We got some updates to share with the community. Of course, we'll take a look at some charts. We're going to dive into our watch list. Since our last live show, we've made some significant changes. We've inverted the list, which I believe we've at least showed the inverted list on this show. It could be wrong.
Yeah, it's not as simple as just a straight inversion. We'll go through the changes.
Perfect. And of course, we'll take a look at my account. We'll make some changes to my portfolio. And if there's any questions, we'll put a message up on the bottom of the screen. Of course, message us in the chat here, regardless of what platform you're on. I believe right now we're live on YouTube and Twitter. Throw your questions in the chat. We're happy to answer anything you might have. Take a look at any charts you want to analyze, as well as you can feel free to text us. We'll put our number on the screen here in just a second. And yeah, let us know what you need. Feel free to schedule some time with our team. Happy to give you a demo, walk you through anything you might need. And of course, let's get this out of the way. None of this is financial advice. We're not financial advisors. So we can get into it here. Ben, I will
do it. I will pull up the watch list on my screen here and talk through, as you mentioned, some of the key changes. So previously, and I'll actually back up for just a second for anybody new tuning in. This watch list is meant to show weekly premiums on spreads, and the spreads are set particularly at the 30 delta and the 10 delta on the put side, and then we're trading the 50 delta and the 20 delta on the call side. So we're trading put credit spreads and call credit spreads with weekly expirations. And we're treating this strategy as you would treat the wheel strategy. So wheel, commonly used options trading strategy, whereby you sell cash secured puts. If you get assigned shares from those cash secured puts, you then go ahead, flip that, start selling covered calls until those shares get called away at a certain price. And then you just rinse and repeat and do it all over again. It's a premium collection trading strategy. We've modified it a little bit. We're trading spreads instead. To protect ourselves on the downside when we're selling our put credit spreads. And we're also, when we do own the shares, we're allowing ourselves to participate in the upside by selling a call credit spread. And last week, a lot of traders experienced some pretty significant gains on that call credit spread on a few different tickers. I think it was like Affirm and Unity Software, which they're on this list, but they're towards the bottom now. So anyways, if you like trading spreads, take a look at this watch list. It's completely free. You could go to usepeakbot.com/watch list. Maybe we could get that on the a banner flowing on the screen here. But yeah, use this watch list to your advantage. We like to enter our positions on Mondays, anywhere between 11 a.m. and like 1 p.m. ish. Our bots do it for us. So I don't even have to be paying attention. Dillon doesn't have to pay attention. If for some reason you're not able to enter a position on Monday, the bot will also go for it and try to get you into a position on Tuesday. So the big changes to this watch list that we wanted to talk about today are we take into consideration trend and risk level. And if you're curious how we calculate trend and risk level, there's just a quick explanation here that shows what we're thinking about when determining our trend and risk level. So read that on your own time if interested. But what we're doing is we're prioritizing by lower risk, and where the trend is bullish. Because on this first chart here, you'll notice there's 2 charts. This is just additional information where you can see the strikes and the net premiums and upcoming earnings and stuff like that. But what we're trading here again is we're trading put credit spreads essentially, right? And then if we get assigned, we'll sell call credit spreads. But at the end of the day, what we're doing is we're trading put credit spreads, which we know is a bullish to neutral strategy, depending where you set your deltas. Like we mentioned, we're setting our delta, our sold put at the 30 delta. So that gives us some room if the stock is flat, even if it declines a little bit, to still walk away unassigned and just collect premiums. So we are filtering, we're sorting this list by lower risk level and the bullish trend. As we scroll down, it seems to be quite a bit of lower risk and bullish stocks this week, at least. And actually, Dylan, let's take a look at these companies for a second. These are a much different batch of companies that we're seeing here than we have seen in the past. I don't want to say the companies are more reliable. Again, this isn't financial advice, but these companies have definitely been around for a bit of a longer time. And we'll be looking at Exxon's chart. We'll be looking at Delta's chart. I did pick out UiPath as a company's chart that we wanted to look at today. So if anybody watching wants us to pull up a chart and analyze further, feel free to put that in the chat. And then when we get to that segment, I will do so. But if we keep scrolling down, you can see that, at right after Verizon here, we're exiting. I'll call it like our golden standard of, we want to see a bullish trend and we want to see lower risk. For ON Semiconductor and Comcast, we're seeing a neutral trend and lower risk. So we're still keeping with the theme of lower risk, but the trend has changed. And of course, we can see the premium that we would be set to, estimated premium that we'd be set to earn with those particular stocks. If we keep scrolling, then we get into bearish territory. And there's 4 tickers with lower risk that are in a bearish trend, which isn't necessarily bad. If you're on the call side, you're kind of looking for that, especially if you're selling the 50 delta. If you could walk away with the crazy premiums you get at the 50 delta and get to keep your shares, that's a win. And we could look at ticker OXY. This is one of Warren Buffett's favorite stocks over the past couple of years. He's talked about this quite a bit. On the put side, we're earning $29 estimated in premium. If we scroll over here, we're estimated to earn $51 in premium if we were on the call side. Now, you might be wondering, why is this row highlighted yellow, or for the most part highlighted yellow? We're highlighting these rows yellow if this company is expected to report earnings within the next 10 days. So we can see the expected earning date here is 2 days from now. So we're going to highlight it yellow. That's just indicating a little bit more risk. Our risk level is still on the lower side here, but it's something to take into consideration. We are getting into the midst of earnings season. We know when earnings is around, there's much more volatility around certain companies, and there could be big swings around earnings announcements. So higher risk, of course, equals higher reward, but you also don't want to get stuck into a position that you're not comfortable with, which brings us back to the main reason we made changes to this list. A lot of people were getting assigned shares of companies that they weren't necessarily comfortable with. And if we go down to the bottom of this list, what I'm talking about is these very high risk, and we'll do more to really call out that these are really high risk stocks here, high risk companies. We've had people trading, a lot of Affirm. I just mentioned Coinbase, Marathon. Yeah, Spirit's a new one because the deal with JetBlue got blocked, so they're now very highly volatile. So there's opportunity to earn a lot on your money trading these particular companies. But again, the risk is also very high risk, high reward, right? Now, I know for Dillon and myself, we're going to want to keep ourselves towards the top of this list. And especially for myself, I got all my shares called away. I don't own anything right now. I'm going to be doing some readjusting and focus on the top of this list as it is now. Probably get, we'll get into some of these tickers in just a bit. But Dillon, anything else of importance you think we should call out in regards to the changes on this list?
No, I think you covered it pretty well. The only thing I would really mention is, again, the reason we wanted to do this is because when we look at our data, we see that our top traded stocks for every week, the top 10, were all previously, very high risk stocks. And, for fair reason, right? I mean, they were at the top of our watch list. They're also at the top of our leaderboard because people are getting paid the highest premiums on it. Maybe we can touch on, Ben, the leaderboard and some changes we'll be making there for this week and moving forward as to how we'll be showcasing realized gains and losses as well as just premium collection. But it was a situation where we said, okay, well, maybe we're kind of telling the wrong story here with our watch list. If you're seeing the top stocks at the top of the list, you might bulldoze through the fact that it's very high risk because you're seeing how nice of a premium it's paying. But what you're not really taking into consideration is, how well established are these stocks? How volatile are they? How often are you going to be assigned? And are you going to end up selling for a realized loss at the 50 delta on the call side? So we wanted to make those adjustments. The stocks at the top you're going to be treating yourself more like an investor, where at the bottom you're treating yourself more like a trader. So yeah, I think you nailed it, Ben.
Cool. So of course, perform your own due diligence before making any trades. Again, this isn't financial advice, but it is a handy tool to see what the estimated premium payouts are for this week for all these companies. So I do enjoy looking at this list quite a bit. It's a lot of good data, helps me make decisions. So I want to go back up to the top of this list here. I want to take a look at Exxon. They're number 2 on this list. So you'll need about an estimated 9,400 in your account to trade Exxon this week using this particular strategy. And the reason you need that much money, what you'll see if you set up this trade in your brokerage account is you'll only need about $400 in margin because the spread is about going to be about $4 wide estimated. But we mentioned the 9,400 because if we look at our estimated put strike price at the 30 delta, it's $94. This is in case you get assigned, because of course what we're doing here is we're trading the wheel strategy. There's always that possibility that you get assigned those shares, so you need to make sure that you've got enough capacity capital in your account to cover if those shares are assigned to you. So for Exxon, you would need about 9,400 estimated. Of course, this could change when market opens and stock price starts to change, but that's what we're seeing in pre-market data, at least right now. So if we take a look at Exxon's chart, I'm going to head over to my Tradier account. I pull up Exxon on this list. I'd like to take a look at the monthly chart just to get an idea of where the stock price has been headed over the last month. Again, these are weekly expiring options, so I'm looking for I'm sorry, I just lost my train of thought. I saw a comment come in on YouTube and I started to think through how am I going to answer that comment. But yeah, these are weekly expiring options. And I'm just looking for like shorter term trends, shorter term movements. I'll get to that question in just a second. So if we're looking at Exxon here, it looks like we're trading in a range of about $96 up to 105 almost. So about a $9 spread. We saw that there was an estimated, $4 spread for our strike price here, our strike prices. According to the watch list, I'm going to go back to that real quick. We're estimating that we're going to sell the $94 put. So that puts us way down here. Actually, I feel pretty good about that because we haven't even seen. I didn't switch it back. I didn't even see, you don't even see the $94 price level on this chart here over the past month.
Yep.
So that makes me somewhat confident that, hey, that's probably a good trade. If you got the capital in your account, that might be a trade that I personally would want to make. If we look over at the technical analysis tool, which Tradier provides us, I like to switch this to the week. Tradier showing a bit of a sell signal. There's 10 sell signals, 10 neutral, 6 buy. Again, this is a bullish to neutral strategy. So on the put side at least. So what I like to do is I just like to add these up. If I add the neutral and buy up, that's 16 versus a sell of 10. In my opinion, it would be leaning more towards neutral. Of course, on our watch list, we have a bullish trend, and we calculate that bullish trend by looking at the exponential moving average for the past 67 days. We chose 67 because that's 3 months worth of data. Again, looking for shorter term indicators. So we do have a question. Does this watch list take into account major news events like Fed meetings or CPI and labor reports and so on? That's a great question. So this watch list, really all that we're considering is the trend here and the risk level. And we determine that. And I would say we are not explicitly including this information as we put together this watch list, but I think that any expected movement is implied in the strike prices that come out of our analysis. If there's more risk to a particular stock, that spread is likely going to be wider, and then that's going to impact our risk level here. The risk level is calculated by dividing the stock price into the estimated maximum loss. The higher the number, the more perceived risk. So to put that in plain English, our max loss is the difference between our sold put strike and our bought put strike. The wider that gap is, you could assume the more risk there is. So when there are major events upcoming in a week, the options market is pretty efficient. Those types of price movements are likely baked into that particular security at the time that we're putting together all of this. And this watch list is updated every day, 8 p.m. Eastern. And then on trading days, which are Mondays and Tuesdays, we update it at 5 a.m. Eastern as well. So we get more up-to-date data. You can always check on this watch list at what time the data was updated. We do provide time in GMT because we have an international audience. So that's 5 a.m. This 10 a.m. GMT, that's 5 a.m. EST. And that's where, that's the time zone Dillon and I are in. So I hope that was helpful. I hope that helps answer your question, that we're not, again, explicitly factoring that type of information into this watch list. However, I think it's implied through the size of the spread, what that particular risk level is. And of course, it could be impacted by other things that weren't mentioned in the comment.
Yeah, and the events that are being considered, Ben, if I'm repeating you here, I'm sorry, I was just taking a look at our watch list. We're not showing news, but we are showing when they're reporting earnings, as Ben mentioned earlier, right? If it's highlighted, we also have a column over there on the right side that shows both the recent earnings report, or if it's upcoming, if it's close enough in the next, this week or next week, we'll highlight it yellow. So just keep that in mind.
Yep. All right. Next company I want to pull up is UiPath, and I want to look at that just because it's a little bit cheaper. It's on the cheaper side for those that have smaller accounts. And we see we got Peabody up here as well. Again, you only need about $2,500 in your account to trade UiPath. So if we take a look at UiPath chart, again, I'm going to look at the 1 month. And I mean, the chart does look like we were trading in a channel at, the middle of January. We jumped up here, traded in a new channel between like $22 and $24-ish. It looks like we've recently broken out into a higher channel. So it looks like we are trending upwards. And if I look back, we don't have an estimated earnings date for UiPath yet, which is telling me that that's going to be coming up fairly soon. And again, we're reporting annual reports now, which sometimes have a larger impact on stock price. So I would keep an eye out on UiPath, even though it looks good. I mean, it's trending upwards. The technical analysis tool is saying strong buy for the 15-minute. I'm going to change it to a week, staying at a strong buy. So again, if we're on the put side, we're adding this neutral and buy together. That's 23-1 on the sell. That's pretty good odds for UiPath. Last stock that I wanted to bring up, and then Dillon, I'll pass it to you so you could show everybody how people can automate this strategy with PeakBot, sure, and you can update your account live. I'm going to bring up Delta Airlines, and again, look at the 1 month chart. it looks like since, the last week in January, we've been trading between $38 and $41. So that's a $3 spread. That's pretty tight. I'm going to flip back real quick to the watch list. Our estimated loss is 150, which means that there's a $1.50 spread. We're estimated, a 0.343% return on our capital needed in the case that we do get assigned. Estimating to sell the 39.50 strike. Going back to the chart here, 39.50 is right around here. So very low volatility expectations here. If you're considering how close this strike price is to where the current price is, Delta would have to drop $1 in value over the course of the week for you to get assigned, but that's pretty close. I personally would prefer like Exxon's chart, right, where the strike price that we're selling wasn't even on the chart. There'd have to be a pretty major dip for us to get assigned there. If we look at the technical analysis tool, again, switch to a week, we're looking at, again, this is for Delta, we're looking at 9 neutral signals, 16 buy signals, so 25 in our favor versus 1 sell signal, which is not in our favor on the put credit spread side. So not a bad candidate, but again, I like to look at, where's that strike price that we're estimating? Where's that going to line up with the current stock price? So Dillon, I'll hand it over to you for some updates to your account.
Awesome. So I will pull up my screen here in just a second, and we'll take a look. So I got some changes I'm going to be making this week. And we'll talk through why. So let me get my screen pulled up here. So if we take a look at my portfolio from last week, as you can see here, by the way, our results chart is being updated. Still a work in progress. We're very close to being, 100% confident on the look and the feel here. I'm also going to switch over into dark mode here, just because everybody I asked, but just so you know, and for everybody listening, if you have a preference between light mode and dark mode, throw it in the chat.
Yeah, let us know, guys. Light or dark?
There's not been a single person who says light mode, just so you know. Not a single person.
Well, now you bias the audience.
Well, you know what? When you stare at a screen all day, if that's part of your job, this is a lot of white. There's a lot of brightness here. This is a little easier on the eyes. But anyway,
I did put in a request to our development team to change our default back to dark mode.
Oh, okay. I like that. I didn't even know that. I like that. So, so we'll take a look at my portfolio from this last week. As you can see, in the last, in fact, if I move this to a week, it's probably better to look at it this way. Over the last month, I've gained about $550, almost $560 in premium, but my net loss is I'm down about 187 now. I had to take some realized losses on some stocks that I got assigned, and I was still earning good premium, but I took a hit on a couple big ones. So we'll dive deeper maybe there next week if we have some more compounded gains and losses. But so a couple things to know here. I'm pretty much going to be changing out 2 of these and keeping 1. So I was assigned this week 2 out of 3 stocks. I got assigned on FCX and KR, which is Kroger here. I did not get assigned on TQQ. It's too many Qs. But however, when we take a look at the watch list here in a second, I believe that Kroger actually fell off the watch list. Now, it's important to know, if you're trading a stock from our watch list, okay, on the wheel strategy specifically, and whether you get assigned or not, if you're trading a stock and it gets removed from the watch list, please know, it's for good reason, right? If it's being removed, it's for a couple things. Well, either it's not paying a high enough premium. If it's paying under a $10 net premium on the week, it's being removed from the watch list, okay? If there's not enough liquidity, if the volume's not there, it can be removed from the watch list. This isn't the instance with Kroger. I believe this was due to the net premium being under $10. It's a relatively inexpensive stock. So we're going to take a closer look here. But what's important to know is just because it's removed from the watch list does not mean you can't trade it. Okay. There's kind of a, and Ben, interrupt me anytime here if I'm speaking out of line, but there's kind of a, call it like a back end, you know, behind the scenes watch list where it's still listed as a tradable stock. For example, I got assigned shares on Kroger. If I decided I wanted to keep trading a call spread on Kroger, it's the wheel's going to do that. PeakBot's going to execute that trade for you. It's just not going to be listed here, okay, on the front end because it doesn't meet the criteria. We're actually going to be working on, and we haven't, you know, nailed this down just yet, but, you know, we're super transparent here. We're going to be working on a way to implement stocks that were removed from the watch list for reasons like the net premium being too low or whatever it might be. We're going to work on whether maybe it's at the bottom of this list or something. We're going to include, once we figure it out, hey, this stock was removed from the watch list last week. You know, here's the reasoning. And just in case you still want to see how much you're earning on premium or what your strike prices are for your call that week, or maybe even a put, then that's going to be there for you. Okay. So once we get that nailed down, just keep that in mind that it's coming. All right. So, however, with that being said, since it's not paying a good enough premium, I'm going to remove the stock from the from my portfolio here. So we're going to get rid of Kroger. Now, remember, I got assigned those shares. Okay, so I actually, in my broker account, I went in and I'm selling a market order this morning when the market opens. Okay, I'm getting rid of the shares because I actually, my strike price, I'll take a quick look at it. My strike was 37.50, and the last it was trading at was 37.43. So I'm really not taking a big loss there.
That's not bad at all.
Now, yeah, I'm down $9 on the position. If the bid is a little bit lower and I end up losing, you know, even double
how much premium did you earn last week on Kroger?
Actually, let's see here.
On your chart, you could just
yeah, that's right.
Search for.
So if we come into results, it was okay. So it was about what I've lost.
Yeah, after fees, a little under $10. So you're breaking even on the trade.
Breaking even, and you know what? For me, that's better than trading a stock that is no longer qualified to be on the watch list, right? Like I'd rather go put my cash elsewhere. So getting rid of Kroger. Now, we've had a couple traders come to me and say, well, I see you always selling these shares. Look, I manually am choosing to intervene here, okay? I can let this keep running, but if it's no longer on the watch list, I don't want to own the shares. That's just my rules that I'm making for myself, okay? So you can keep it running here, but if you choose not to, that's totally okay. So additionally, TQQ. So if we take a look at TQs on the watch list here, you'll notice that it transitioned last week. I believe it was moderate risk, still bullish, but it's moved over to high risk here. And the spread is a $400 max loss, which means it's a $4 spread here. I don't love it. To be honest with you, I'm going to be going back to one of my old flings for slightly less capital and more premium. Okay, and that's Carvana. We're heading back.
Ooh, nice.
I'm scratching the itch. Carvana, honestly, you know, I made 32% last year on the wheel strategy in 2023. Honestly, more than half of my returns were due to Carvana. Now, Carvana had a wild roller coaster of a year last year, but I'm jumping back in. So I'm actually going to remove TQ here. Remember, I didn't get assigned. This was a successful contract last week, but I think there's better bang for my buck with Carvana. So I'm going to add Carvana here, and we're going to get on with it. So activate. By the way, for anybody who hasn't noticed this, we put our agree confirmation screen back in here. So now we got Carvana. I was assigned on FCX. If we take a look at that in the watch list, that's Freeport, Freeport McMoran, however you want to say it. So I'm going to roll with this, okay? It's moderate risk stock, which I'm okay with. It's well within my rules of what it's paying in premium. I like to stick between 0.5% and 1.5%, okay? Now it is neutral, but it's trading at 37.36. My strike price is estimated this week would be $36.50 and $35, which means it's only $1.50 spread. I'm only risking, actually, I'm sorry, I got to sign the shares. So my strike prices are $37.50 and $39, which means I'm going to earn a nicer premium this week. I'm going to earn about $41 in premium. And you know, taking into consideration that the stock's trading at 37.36, it's pretty damn close to my sold strike price here for the call. I'm going to rock with it. I'm going to keep FCX going. So right now we got Carvana, FCX. I've removed Kroger. I've removed TQQs. I'm going to add 2 more stocks here that are on the relatively inexpensive side. Ben actually reviewed one of them. When you were looking at UiPath, Ben, I really liked, how would I search this? Where is it? It was toward the top, right?
Yeah, I think it was 3rd.
Okay, path. So if we take a look here, I'm going to need about $2,500 in capital to secure this contract. Bullish lower. This is, you know, 2 green lights here, right? We prefer to see that. So I'm going to add that in. We're going to trade path. Okay, we're going to get that going. Remember, it's super easy to get a stock added into your portfolio. Select your bot, select your stocks, set your budget. Now, before I do that, know that you can also add secondary stock in here. So the other one I'm going for is C3 AI. When we look at that on the chart here, it's bullish moderate, okay, but it's trading at 28.47, only $1.50 spread. I'm earning $22 in premium, which is about almost 0.9% return. But here's what I like. With only $1.50 spread and the stock trading at 28.47, I got a lot of breathing room between the current price of the stock and my sold strike price here for the put. I got almost $3.50 here. So I feel really good about that. I'm going to add that one in as well. So I'm going to run 1 contract on each of those. We're going to hit activate, and we're going to be rocking and rolling here. And that's going to fill up my portfolio pretty good. I have just under $14,000 in this account. So I feel good about this. I made a lot of changes. I got some moderate stocks, some bullish lower, bullish high, bullish moderate. I'm kind of all over the place this week, but I'm giving it a go. What I've been doing, at least through this year, hasn't been crushing it for me. I've been trading some riskier stocks. Right at the beginning of January, I took some really heavy, in fact, why don't we just look at it? I took some really heavy realized losses. AFRM took a big loss there. Run took a realized loss on that one. AFRM again. And as you can see here, the first or second week of the year, I got hammered on Wayfair, Upstart, and GPS. Just totally hammered on those. I'm going to try not to make that mistake again, right? Those were relatively volatile stocks. And you know what? Look, the market wasn't doing all that well to get the year started, right? But again, you can see over the course of the year, you can see my equity curve here. A lot of zeros. Maybe we clean that up. But hey, we're all about being accurate. So, but anyway, that's my portfolio. Those are the changes I made. Sorry for taking a little bit longer there, but we're running 4 different stocks, 3 of them which are put spreads, and on FCX I have a call spread. So going to be earning some premium here. Excited to get into it. And again, my mindset is I'm not trading for this week. I'm not even trading for this month or quarter. I'm trading it for this year. okay, and years past it. Long-term mentality, earn enough premium, collect enough rent. It's going to eventually outweigh any losses you have along the way. So,
it's a great mindset.
Yeah, it's the only mindset to have when you're trading this strategy, if you ask me. So, Ben, what else?
I think that's it, man. Good
Okay.
overview. Glad to see the updates in your account.
Yep.
And you'll be posting your results. I mean, you have been posting your results all over our social media. So follow along with Dillon's journey.
At use PeakBot, Twitter.
See how he's been doing. Try PeakBot for free for 2 weeks. We don't even take your credit card. Go to usepeakbot.com and you'll get some more information there. If you get your account set up and you integrate with your broker, we are integrated with Tradier. If you get your Tradier account all set up before 11 a.m. today, you'll be seeing automated trades in your account today.
That's
for free.
Awesome. Well, Ben, great show today. Thank you for the question earlier. VBB met. And yeah, we'll be back this time next week, 8:30 Eastern on every Monday morning, giving you the pulse on premiums, everything from exploration to automation. And yeah, thanks so much. Happy trading this week. Good luck. And we'll see you at the peak. Take care, everybody. Thank you.